The euro-dollar pair kept strengthening yesterday during the North American session. Meanwhile, during the Asian session today, the quote almost approached its December high. In fact, the bull market may extend despite the fact that economists expect the US Federal Reserve and the European Central Bank to take a dovish stance on interest rates. What's more, volatility is likely to remain high before the end of the year. The ECB is widely anticipated to hike interest rates by 0.5% in December and early 2023, and then pause to assess the impact of the previous moves to curb inflation. Meanwhile, traders bet on a stronger euro. Before we proceed with technical analysis, let's see what macro events are scheduled for today. All in all, the macroeconomic calendar will be almost empty, with the US Producer Price Index and the Michigan Consumer Sentiment Index being the only interesting reports delivered today. If producer prices in the US fall below a forecast rise of 0.2%, the euro may strengthen versus the greenback, as that may indicate a dovish US central bank. However, should producer prices rise above expectations, the Fed may well postpone its plans to reduce the pace of rate hikes. In such a case, the dollar may rise against the euro. On the 1-hour chart, a false breakout through the December high of 1.0591 will produce a buy signal and trigger a correction to the nearest support level of 1.0546, where bullish sentiment may increase. A breakout and consolidation below the mark will generate a sell signal. The price may drop to 1.0494 and then extend the fall to 1.0446. It will become possible to go long at these levels after a rebound, allowing a bullish correction of 35 to 40 pips. Likewise, long positions could be opened at 1.0546 after a false breakout. If the price settles above 1.0591 and tests the barrier from the top down, the targets will stand at 1.0640 and 1.0663. Short positions at 1.0640 could be considered after a false breakout and at 1.0663 after a rebound, counting on an intraday correction of 35 to 40 pips at least. As for the pound-dollar pair, it will become possible to go long when the price tests the mark of 1.2279 from the top down. The price may ascend to 1.2341 and then rise to 1.2410. Short positions at 1.2410 could be opened on a rebound, allowing a correction of 35-40 pips. Meanwhile, a false breakout through 1.2279 as well as the December high of 1.2341 will generate a sell signal with the first bearish targets at 1.2219 and the moving average. Consolidation below the range will make another sell signal and the pair may head toward 1.2158 and 1.2108. Short positions at these levels could be considered on a rebound with a view to catching an intraday correction of 25 to 35 pips. At the same time, buying the instrument at 1.2219 will become possible after a false breakout only. Take care.